How does a stock go from $626,000 per share to just $185 a share? And how does it do that in less than 12 seconds? Because that is exactly what happened yesterday. And perhaps more importantly, what happens if you just so happen to buy, I don't know, about $900 or so worth of that company when it was cheap? Let's go ahead and break it down. So that is exactly what happened yesterday to Warren Buffett and several investors. His company, which was once worth about $626,000 per share, fell instantly due to a glitch on the New York Stock Exchange. And there were some investors that saw this glitch and said, oh my God, this is a once in a lifetime opportunity. Let me buy every single share I possibly can. And for any investors that invested right around $925, that small investment would have been worth, keyword would, have been worth nearly $3 million today. Now, the keyword was would, and that's because the New York Stock Exchange said they are going to nullify, or their word was bust any trades, because this was, in their words, a glitch. And it was. Now, I'm here for us regular people. I wish I got an alert. I wish people would have told me that this happened, and I'm all for us, okay? Because just like when Delta Airlines and all these airlines come out with all these crazy glitch flights and everybody tells people about it except for me, and everybody flew to Dubai like 10 years ago and y'all ain't tell me, I want to be on them flights, and I'm happy for y'all. Y'all just need to put me on text chain next time, okay? I'm like that, okay? Honor the deal. Okay, that's how I feel in this particular instance. But here is the big thing, really three big things as I get back to my notes. While Berkshire Hathaway was the biggest loser, quote unquote, again, everybody's going to be made whole here. It looked as if they lost 99.97% of its value. However, it was 40 different stocks, or 40 stocks total rather, that was impacted, or that were impacted in this particular glitch, including AMC, obviously Berkshire Hathaway, GameStop, and even one of my companies, Chipotle. Doing this from memory instead of looking at my notes here. Should probably look at the notes. But those were some of the name brand companies, the companies that we recognize that were impacted. Now again, most of the trades that were made during this time, is roughly about 2 hours, are going to be corrected. People are going to get their money back. If you were trying to trade during that time, again, unfortunately, if you got a deal, they're going to kind of refund that money, which again, an unfortunate thing if you were to have made $3 million. I hate that it happens, but that is going to be the case. Here's the thing though. What happened? Why did it happen? And is this common? The answer is no. This is not necessarily common, but this is not the only time that it happened. This did happen just last year in 2023, where there were several stocks that did have a glitch, though it was not this extreme. The biggest company last year was Verizon, where it had a bit of a glitch and fell pretty significantly, but it wasn't 99%. Now, depending on who you ask, keyword is who you ask, there was the flash crash, it is a tongue twister, of 1987, where the stock market had a pretty significant dip in just a single day. Now, when I say who you ask, there were several factors, but some people attribute it to digital trading and that becoming a bigger factor on the stock market at that point in time. There was a potential recession, a bunch of other stuff in that pot of things that did happen at that point in time. So it really depends on who you ask, okay? Was it 12%? Was it 25%? Was it 80% of that particular crash? Again, depends on who you ask, okay? But some people do attribute that to a potential glitch or an error at that point in time. But again, it has happened in the past. Here is something that you perhaps did not know that you should have known. 2 weeks ago, just 2 weeks ago, I did an entire video around how your app is not cheating you. And we did talk about the circuit breaker, which is a protection measure of what happens when a stock drops by an extreme measure. I don't know, like 99%. And what happens when this occurs. This did happen with Berkshire Hathaway just yesterday. Now, ironically enough, you know, I look at the data, I look at all the numbers. Y'all ain't watched that video. It might have came in handy for those who watched it. You would have known what would have happened and how this whole thing played out. So I'm going to link to that video at the end. and you're gonna know everything you're gonna need to know. But that was an extremely important thing, because also what happened, right? Why did this thing particularly occur at this point in time? While we don't have all the answers just yet, because it just happened yesterday, right? There is one major theory. Okay, the theory is we moved from T plus 3 to T plus 1. I'm not going to go into all the details because I did that 2 weeks ago. Okay, but basically, the way that our trading works is it used to take trading day plus 3 days for your trade to go through. For you to say, hey, I'm going to buy a stock on one day, and for it to go all the way through. From now, just you buy a stock today, and then by tomorrow, everything goes through. Okay, that changed, and for all of our computer systems, all that stuff to update and go through, now that is now done, all these systems updating, they think that that glitch is kind of working its way through the system, and that is likely one of the results of that was what happened on Monday. Is that the case? Again, it just happened yesterday. This is the prevailing theory at this point in time. We are going to see if that is still going to be the case. And again, a lot of this news is still coming out. Do I necessarily believe that theory? Sort of. It's just the main theory right now. But the main thing is this. The remedy is out there. People weren't necessarily hurt, at least that I have read just yet. If you didn't get to buy it, it's fine. You got your money back. I think that's the biggest thing. I don't want anybody taking my money and not giving me the shares, and I get no shares and no money. That would not be great. That's the biggest thing. I get my money back. Everything's fine. So that is the biggest thing. You're going to get your remedy, which is the way the stock market is supposed to work if there is a well-known error and there is something wrong. So that is the biggest thing. Other than that, that is the biggest foul here and the biggest error. But the biggest thing that you should know as an investor is you do need to know the rules and the parameters of what it is you're entering into. And that's the thing that most investors don't know. We know, hey, we want to be here, we want to invest in the stock market, we want to make money, but we don't always know like what's outside of that. Right? What are the rules? What are the protection measures and all the the ins and outs? And you don't have to be all up in the weeds, okay? But you do need to know the rule book to a degree. And in that video I did about 2 weeks ago, I do give you, an outline of the rule book. And it is really important for you to know what those rules are so you can navigate your apps a bit better. You can navigate the stock market just a bit better. So the best thing for you to do right now is to go out and check out that video so you can know exactly what goes on behind the scenes when these errors do occur. And when you feel like your app is not working in the way that you should, that video is going to help you out. So if you want to know more around how these things work and how you are protected in some of these instances, this is the video that you want to check out next.